50 years ago, Wall Street transitioned from its paperwork crisis in the late 60s to modernizing capital markets, replacing physical movement of stock certificates with electronic book entry ownership. And fast forward to today, blockchain has empowered programmable capital markets, once again testing the definition of ownership of these various underlying real-world assets. However, this time removing intermediaries from the picture, especially when issued directly on the blockchain, which you've already done so back in, I believe, 2019 with your preferred shares.
Just tokenizing an asset. So the technological exercise of taking conventional databases and creating a digital database with a tokenized smart contract representing the security. Just the technological exercise in and of itself does not create liquidity, does not create price discovery, does not create transparency. And the bulk of our capabilities were developed during the time of far less friendly political and regulatory climates. What we've learned at the time, and we've gotten really good at it, both on the security side and now on the CFTC side as well, is that you have to learn how to innovate and incrementally. If you knew kind of enough about crypto liquidity, crypto global liquidity, you may not want to import a lot of these features into the securities industry because some should not be imported for a bunch of reasons. Again, that's a separate conversation. But certainly what it takes for a regulated asset in the US to be liquid, vibrant, transparent is market structure. And the way you create market structure is by allowing different market participants, particularly on the demand side. So think of other broker dealers and their customers with easy ways to access the system. The more the better, right? I have a long-term bias for native tokens that support infrastructure needs, right? That can be used as oil, as ingredients to build tool sets on it. Bitcoin historically has not shown itself to be that. And so by definition, whether it's XRP or Ether or that supports the Ethereum blockchain or others, I have a bias towards that because those are ingredients on which market structure can be built.
Do you think the Clarity Act is going to pass?
Yeah, funny. That's a great question. And we were in Washington in June meeting with staffers on the Senate side. This time, we go there pretty regularly. And now this is almost a month later. If you look at kind of where we're on the calendar, and yeah, it's an important piece of legislation. The White House is very focused on it. I think the president of the Meta had phone calls with key senators today. You just look at the calendar, where we are. It's an election year. I think the odds at this point are less than 50-50.
What's going on, family and friends? Welcome back to the channel. Today, we're joined by one of the most respected voices at the intersection of Wall Street, regulation, and digital capital markets. A man who has one foot in traditional securities law and one foot in blockchain. Let me bring him up onto the stage here. Let's see, where is this man at? There he is. All right, here's our guest, Alan Konevsky, chairman and CEO of tZERO Group, a company helping pioneer the regulated trading of tokenized securities. For those in the audience, this should hit home, given the fact that we've been keeping our eye on this subject for quite some time. So this isn't an interview. This is going to be a masterclass on tokenization in a very much regulated landscape. Alan's career spans nearly every layer of modern finance. He spent almost 12 years at Sullivan & Cromwell, one of the world's premier financial law firms. You know what? And let me also bring this up onto the stage here. So those in the audience who are staring at their phones can take a look at Alan's background as we speak. Again, Alan's career spans nearly every layer of modern finance. He spent 12 years at Sullivan & Cromwell, one of the world's largest law firms, especially focused on finance, before serving as a manager and director and senior counsel at Goldman Sachs, just hopping from one great firm to the next. And he doesn't stop there. He later joined Mastercard, where he led strategic initiatives focused on technology and innovation. He also served on the DTCC Private Securities Executive Advisory Board, which is a hot topic right now, given that the DTCC has made some significant announcements this week. This gentleman and few executives have had a front row seat to the evolution of financial markets, quite like Alan. So again, this is going to be a great conversation. Alan, I love looking at your card here, but I'm going to bring you center stage here. Good to see you. Thanks for joining us. How you doing today?
Ray, Terrific. Thank you for having me on. I'm delighted to be here and really grateful for the introduction. I hope I can live up to the expectations.
Well, it's very much deserved, especially with again a man of your background. I didn't even get into your education, Columbia, Harvard Law. I mean, you've got a proud pedigree, sir. And so, as mentioned, today's discussion is going to be on the focus of the future of tokenization, institutional adoption, regulation, custody. I mean, your competition, market infrastructure, and again, tZERO's long-term vision for transforming digital markets. In my mind's eye, when people go and look at a Steve Jobs interview from 10 years ago, I look at this opportunity in this production as being one of those, because you're paving the landscape through a regulatory framework. And again, that's very pivotal for this movement. So let's kick things off here. For those in the audience, I'd say around 50 years ago, Wall Street transitioned from its paperwork crisis in the late 60s to modernizing capital markets, replacing physical movement of stock certificates with electronic book entry ownership. That's what paved the way for the DTC before becoming the DTCC. And fast forward to today, blockchain has empowered programmable capital markets, once again testing the definition of ownership of these various underlying real-world assets. However, this time removing intermediaries from the picture, especially when issued directly on the blockchain, which you've already done so back in, I believe, 2019 with your preferred shares. So as a backdrop for those in the audience, knowing that you've also tokenized your cap table, specific shares within your cap table, what has your experience been like? What have you learned? What's been some of that feedback? Talk to me.
No, terrific. And Ray, again, thank you. So tZERO has been one of the earliest innovators in the tokenization space in the US. And when tZERO raised its security token offering in 2018, which was at the time, I believe, somebody's probably going to call me out wrong on that, but we'll see, was the largest tokenization infrastructure. No one talked about tokenization infrastructure at the time, not in those terms anyway. But the largest tokenization infrastructure capital raising at the time, $135 million that tZERO raised from a range of very important investors, including a broad cross-section of retail investors, and they've kind of remained on our cap table and post our restructuring in a different form, but a very important part of our community. It was a leading exercise in raising capital at scale, tokenizing it, and then creating the right market structure, the right infrastructure in place for secondary liquidity, which was innovative at the time. Secondary liquidity that both, kind of to your point, had one leg in traditional finance, in regulated ATS-driven trading and custody, and one leg, of course, in tokenized DeFi world. To the extent people thought about it at the time in the same ways as we think about it now, to the extent that was permitted, and the functionality that was allowed to be deployed at the time. It was innovative. I think we led the path. We also learned a few things. One of the critical lessons that came out of that exercise, and I think that informs where tZERO got today with our mission to be a leading kind of integrated infrastructure provider, turnkey, end-to-end infrastructure for tokenized assets in the US for a range of B2B and B2B2C partners, is that just tokenizing an asset. So the technological exercise of taking conventional databases and creating a digital database with a tokenized smart contract representing the security, just the technological exercise in and of itself does not create liquidity, does not create price discovery, does not create transparency. There was a sort of fallacy that, again, it goes back in the history of this industry, that if you take an asset and you tokenize it, particularly an illiquid asset, you're going to more or less overnight end up with something that trades like Apple right? That, of course, does not happen. What's required is creating the right market structure around that asset, or ideally asset class, because market participants need addressable markets that are worth their while, and creating that on the demand side, on the supply side, on the infrastructure side. And that's where the idea that, given where we are in the industry at this time, and I know we'll get to that in a second, what's required is independent, kind of turnkey, interoperable infrastructure that allows as many market participants as possible, broker dealers, asset managers, X, Y, and Z, to enter the tokenization economy. And that was the biggest lesson that we learned, that I think informs who we are now, that tokenizing an asset without creating the right market structure, particularly on the demand side, is only part of the exercise. So.
Yeah, and thank you for that. And that's where I don't, because I think for people who kind of got to the point where I'm at today is, if especially for, let's call us digital natives, we may have had exposure to the public markets or very minimal. Maybe that's for personal choices, distrust or whatnot. But we see a proposed new promise of a new financial markets underpinned by what we believe is transparent blockchain, distributed ledger systems. Many people believe that Bitcoin was like down with the banks, down with the governments, down with the traditional ways of how the world, I believe, works, and that's not, and unfortunately that is not how the case, and that's not how the world works. Things are underpinned by standardization, protocols, governing bodies, governance at large. And so that's where I believe you guys are really, driving your platform forward, is because of the underpinned from your certifications, qualifications, the regulatory accomplishments which you guys have been able to achieve in-house as well. Because of that, and I love to put them on the screen here, is a comparison of what you've been able to achieve through, let's just say, tZERO versus the traditional approach. You've got your broker-dealer license, or the, and going beyond that, it's the SPBD, Special Purpose Vehicle Broker Dealer License, in addition to your ATS, which creates a marketplace or a venue for trading amongst your customers. So not only can you offer your inventory or sell third-party inventory, but you can allow and enable buy, sell, trade within your platform. So those are different layers in my mind's eye. Then you add custody through once you take over computer shares, the transfer agent, and everything else once everything goes on the blockchain. But I don't think those can be accomplished, though, again, without your qualifications and certifications and trust from regulators. So if you don't mind me asking, what kind of feedback have you received from regulators based on your accomplishments to date?
The world we live in now, from a political and regulatory perspective, is very different than the world we lived in, before the last presidential election. That's not a political statement. I think that's probably 12 other podcasts you can watch if you want to listen to stuff like that. Yeah. But I'll tell you, from a digital asset industry perspective, the world we live right now is a very different world. The political and regulatory climate is certainly from a psychological headline level, but that also translated into real legislation and rulemaking, and new people at the agencies, including the SEC and the CFTC, that are very receptive to innovation and to digital innovation, and equipping market participants to get the right licenses, to get the right approvals, creating sandbox type environments that allow people to experiment and innovate in a compliant way. The world wasn't always like that for this industry in particular. And the bulk of our capabilities were developed during the time of far less friendly political and regulatory climates. And what we've learned at the time, and we've gotten really good at it, both on the security side and now on the CFTC side as well, is that you have to learn how to innovate and incrementally. That ambitious kind of forward-thinking kind of 30,000-foot view of how the world should be. You need to have that, right? That needs to inform you philosophically and from a long-range kind of strategic roadmap perspective. But if you want to have operational viability, commercial viability, you have to innovate incrementally, and you have to decide what is allowed, how far, pushing the envelope has sort of, has kind of a risque flavor to it, but how far can you go within the construct of what's currently permitted on paper and in practice? You do that. And then you move again, and you move again, and you continuously engage in positive conversations with the regulators. You show credibility and trust, and that's one of the key differentiators in tZERO. Why I joined the firm, and that has been the core thesis of tZERO is compliance, trust, credibility. And I don't want to make it seem like the whole company is about licenses, because that's only a small piece of it. But it is about the overall market structure that is supported by regulatory approvals that are based on this kind of trust and credibility through incremental, responsible innovation that we developed over the time. Where if you look how you got from, like, I'm not going to say A to Z, because we're not at the end of the alphabet yet, but if you look at how you got to A to M, seems like, oh, that's a lot, but the way we got to A to M was by going to A to B and B to C, and at the end of the day, you end up with a leading vertically integrated regulatory stack for tokenized securities that's end to end, that's turnkey, and that meets the need of a range of market participants, and is really innovative.
As the market is incrementally being changed, there is a proposed bill for an Equal Opportunity for All Investors Act, which is to impact even the accredited investor rules. And I think it rhymes with the evolution of this space here, Alan, because, as I interviewed, let's just say, the CBO of Zonix, Sanjeev Barari, we talked about distribution and how some of these, or when these assets are issued, that the like, let's just say, within the metadata, there would be the governance of that, of those tokenized securities or those offerings, maybe with a 506B or D offering, or whichever rule they are for that jurisdiction in that part of the world. That might differ from, an asset being issued in Dubai under a different regulatory regime, which I believe is VARA. And so, but where I'm getting at is, once these assets, or let's just say maybe a citizen who has dual citizenships, lives in different places, were to purchase an asset cross borders or in different jurisdictions, I mean, are we going to see some type of standardization of a equal opportunity investor rule for the entire world? I mean, is that the fix, you think, in your mind's eye, or what's an approach that maybe all regulatory frameworks can participate in a level playing field? Is that even of discussion at this moment?
That is a phenomenal question, and I'm not just saying it because you invited me to this podcast. And it gets to one of the core parts of the answer to the why tokenized question, right? You go on these talks, or you go on a panel, and inevitably you get the question of, well, tell us why people should tokenize securities, right? And it's supposed to be kind of an easy, open-ended question that that people can take in 1,000 different ways, particularly if you want to promote your firm. And inevitably you get wrong answers. Like what I said a few minutes ago, well, tokenization creates liquidity, right? Again, in and of itself, it doesn't, right? Mm-hmm. To me, the right answer to why tokenize, and I promise I'll get back to the cross-border question, is, it has a bunch of elements to it. One is multi-asset convergence. So every asset is siloed now, more or less. It's a function of market structure and regulation and just habits over decades. You got public stocks, you got private stocks, you got derivatives, you got crypto, you got credit, you got real world assets, including real estate. They all sit in silos. Some silos are more liquid and transparent than others, but they don't really talk to each other. So what blockchain and tokenization is supposed to do is take all these asset classes, give them the same shared digital language, so you can create more interoperability, so you can create more composability and create different kind of cross-asset products that don't exist now. That could unlock liquidity, because if you tear down silos, and you can move liquidity from one asset category to another very easily, because they sit on the same database. They're represented by the same bits of computer code, same smart contracts, programmable smart contracts, and they're interoperable, and you can create far more kind of sophisticated, evolved, interrelated, fractionalized products that don't exist now. So that's one reason. The other reason you've heard about, talked about a lot is efficiency, right? So you take a business that sits on many, many databases, operated by many, many people, many middlemen who do their different jobs, and they often don't talk to each other. Often the way they do their jobs are kind of manual. People talk about certificates and things like that. That doesn't really exist that much anymore. But things are a lot electronified, but in fragmented ways. But you take that system, and again, you collapse it to one kind of digitally native database, whether it's permissioned or permissionless. It's a separate conversation. That is programmable and self-regulating. That means it's faster, cheaper, more transparent, more inclusive, and so that kind of efficiency type arguments. Then you hear people talk about AI interoperability, and I've been kind of a big proponent of that. Is I think the needs of machine-to-machine economy and AI efficiency is moving across industries. From my perspective, leads to tokenization of records, because AI agents need to integrate and be interoperable with data they touch. They need to be able to pay each other. They need to be able to manage portfolios. If you look at financial services, trade assets, and they're far more easily integrated with tokenized assets and wallets than they are with traditional bank and brokerage and other types of accounts. And so that's a top-down force function for why tokenize. Then there's, to your point, kind of the generational shift towards DeFi, and people used to say it's just blockchain maximalists who don't trust the institutions, don't trust the government, kind of self-custody, self-ownership. My assets, my wallet, things like that. I actually think blockchain maxis probably anticipated a generational shift where the younger investor segment, 35 and under, let's say, I'm sure somebody's going to get mad at me for saying that, it generally has, by and large, has that worldview more than the folks kind of over that threshold. And so DeFi interoperability with DeFi custody and other DeFi tools, around borrowing and lending and sending and remittances is going to be increasingly important. That leads to tokenization. And then this is where I come back to your question. On that list was global convergence. Stablecoins are a phenomenal example of that. Right? You took an asset class that's been, this money, right? That historically has been, look, of course you can send money abroad, you have Western Union and MoneyGram and Swift, but it was fragmented, it was expensive, it was slow in many cases. And you took something that made it fast, cheap, transparent, and really what internet did to data, right? Stablecoins did to cross-border remittances. And so a big promise of blockchain technology, because you are, again, creating a global ledger with representations of value that can easily cross borders, is that cross-border convergence. Now, and so what I think is required for securities to do what stable coins are doing now is closer integration with regulated infrastructure providers like tZERO in the US, with a regulated infrastructure provider in the UK, and we have a terrific partnership with a company called Archax, and I think very highly of them. And in Asia markets and the Middle East and other parts of Europe and Latin America to facilitate that global cross-border capital formation and trading and custody. And so that's a really important thesis that we're tracking.
On the screen, there's which you have illustrated on your website are your either strategic partners or even some of your interesting, I would say, subsidiaries. So things that you've either built in-house or slowly, I believe, acquired, but which you kind of hinted on as far as, let's just say, within your database, if you were to bring on or onboard a new customer that has to, let's just say, satisfy accredited investor requirements, that you are providing even the verification of their accredited investor status or even higher qualifications. Beyond that, can we talk about your approach? Why was that so important to build in-house, or what inspired? I believe it's verifiedinvestor.com.
Yeah, that's right. Look, we have a terrific business that we've owned for some time called verifyinvestor.com, and it provides investor accreditation services. You started at last question, and that was sort of the first part of it,
Yeah.
is around political and regulatory initiatives to democratize capital formation, particularly around private assets,
Mhm.
and for example, by changing the accredited investor definition. And there are all sorts of opinions on the topic. Um, the CEO of Coinbase, not that long ago, kind of was saying, well, we have to change the definition. It's kind of archaic. It's based on income levels
Yeah.
largely. And we got to get to a model that's far more fluid and kind of recognizes what kind of risk taking should we as a society be comfortable with in some asset classes. And that's a fair conversation. The rules the way they are now and the way they've been for a while, generally for a private placement of securities, particularly under Rule 506C, you need to go through enhanced verification of investors' capabilities, and we have a business in house that can deliver that for our issuer and other platform client scale and in a very cost-effective way. Why own that as opposed to just partner with somebody else? It gets again to the point of integrated turnkey infrastructure stack where somebody comes to us and they can pretty much get their infrastructure needs for tokenized, in this case, private asset, but it's not only limited to that, met internally at tZERO, soup to nuts. And so as the world will continue to evolve, the accredited investor definition already has changed in recent years to provide additional ways how people can meet it, other than kind of financial tests that need to be verified. And we'll continue to kind of live and adjust to that definition. Clearly, some sort of parameters is appropriate for us as a society when we determine, kind of what's the right level of risk taking and for whom. And the test for us will be to the extent that these rules require issuers or other broker dealers or middlemen to run certain traps. We will provide tools for them to do that efficiently and without having to plug in multiple vendors.
Available on your website is insights section, which you house some really interesting data, specifically around on the screen here is the accredited investor outlook for 2026. Because I think there's just a big discredit, which even relates to what's going on with unfortunately my former employer Linked, which is kind of an interesting conversation, which even ties into a company like Ripple Labs. Because let's just say with Linked, there's 13,000 investors that invested into, let's just say a percentage of them that invested into a company called Ripple Labs. Granted, they're investing into a special purpose vehicle. Let's just say, even if it was a direct investment into the issuer, which I mean, Ripple wouldn't allow that because then the cap table would be extremely surpassed I believe the benchmark of 2,000, or there's a specific amount which I believe you then trip public reporting requirements, things of that nature. But regardless, though, I feel like there's just a radical transformation that would need to occur. And again, how things are either maybe even issued from the issuer. If it's on chain, it's almost like the agency is then provided right back to then that enterprise customer, because then they provide, underpinned by your tech stack, tZERO, but they have agency on basically, like you mentioned, soup to nuts through the entire process of what used to be broken up amongst intermediaries. So it's just like there's just so much that you're offering, and how many different ways we can take this conversation right now. But again, I just feel like the audience should know, and let me take this off screen here so we can see your handsome self. But it's more of, what do you think the landscape looks like for this, for the tokenization, for this platform era? Where are you positioned? What do you guys anticipate for yourself in the next short term, long term? I mean, Securitize just IPO'd. What do you guys anticipate for yourselves? There's just, again, so much going on in this landscape. I think, but again, you only have 15 minutes. So however you'd like to chop this up, the stage is yours.
I appreciate it. So we're at a really kind of interesting moment in the industry where we've gone from a period where most kind of traditional market participants, including us and including our peers, and you mentioned Securitize and their recent de-SPAC transaction. They're publicly trading, and I kind of, I congratulate and commend them on that. And I think that's a terrific step in their evolution. But there was a period of time where most folks who do what we do largely operated kind of niche, closed loop kind of marketplaces with a little bit of private assets, a little bit of retail demand, some kind of isolated insular infrastructure that doesn't talk to each other. And you experiment with tokenization inside these walled gardens with kind of corollary effect that basically takes assets that are already kind of niche and thinly traded, chops them up into even smaller addressable markets, and then obviously doesn't deliver on the very promise of tokenization that we went through before, which among other things is kind of global interoperability and all these other pieces of it. And coupled with that was a point that we made before, that people thought that by tokenizing something, you're going to make it liquid, right? Which of course, just presto change, kind of wave a magic wand, and people are looking at crypto and saying, well, crypto is tokenized, so therefore anything I tokenize is going to be liquid, which of course with regulated securities in the US at least is not the answer, because you need market structure. The reason, if you knew kind of enough about crypto liquidity, crypto global liquidity, you may not want to import a lot of these features into the securities industry, because some should not be imported for a bunch of reasons. Again, that's a separate conversation. But certainly what it takes for a regulated asset in the US to be liquid, vibrant, transparent, is market structure. And the way you create market structure is by allowing different market participants, particularly on the demand side. So think of other broker dealers and their customers with easy ways to access the system. The more, the better, right? And so the industry being in that zone now, and a lot of it is being fueled by a shift away from kind of niche assets where you hoped blockchain would breathe life into them, into assets that are already liquid, already disclosure rich, like public equities, like cash products, money market funds, and others. And where you look at tokenization not as kind of a resuscitation tool or some kind of a metamorphosis, but really just as a way to create new access points for digitally native community, create new on-chain utility functions, whether it's on-chain DeFi borrowing and lending protocols that are more efficient than traditional measures. New ways for retail public to collect their stock lending interest on their portfolios that otherwise might be kind of captured by their broker dealers unless you have special arrangements.
I think with your most recent article that came out, it was where even I think Carlos Domingo was a reference, but it was I think it was on the philosophy of tokenized assets being issued on a primary basis or by a third party. Does that ring a bell, or does that make any sense? Because
it does, and it's part of this whole conversation. Again, the shift that you're looking at vibrant asset classes that need this technology in order to evolve, right? And which is a very different conversation. And so there, your first job is to develop the right infrastructure, because these classes already live in a very sophisticated marketplace with many kind of layers to it. And so you have to get the same pieces around the tokenized version of it in order for it to work, the supply piece, the demand piece, and kind of the infrastructure that sits in the middle, and the need for folks like us, folks like Securitize and others, to provide that connective tissue. Which products will survive and will be dominant models going forward? To your question, is it kind of issuer-sponsored direct tokenization? Is it some of the indirect tokenization models? Like, we partnered with a terrific company called Denari. We announced that probably a week ago or so. That tokenize and fractionalize U.S. public equities. My goal is to provide infrastructure to support a range of transparent, compliant products. I think that issuer-sponsored tokenization, if you kind of advance this out enough, is a model that allows this technology to live up to its fullest potential. But in the meantime, you can have a range of different product options, direct or indirect, so long as they are compliant, so long as they're transparent, so long as the disclosure is right. There's some products out there that call themselves tokenized equities. They're not tokenized equities. They may be derivatives, they may be receipts, they may be wrappers. Nothing wrong with these products in and of themselves, so long as you kind of represent it the right way to the investors. You touched on this before, Ray. Your share is sitting 3 SPVs into something, even if the SPVs are tokenized, or if all you own is, effectively kind of a contract for difference or swap or some other kind of a derivative that gives you economic exposure to what Apple might do over the next year. That's not the same thing, and it's tokenized. That's not the same thing as being an owner of a tokenized Apple share. So
Yeah.
it's okay. These products existed for a while, but just be transparent with the marketplace, right?
Yeah.
Tokenization doesn't change the fundamental character of whether it's a security or not a security, or what is it. And so our goal again is to be kind of very interoperable and open-ended and independent in providing infrastructure for a range of products and protocols and standards, including in the public equity space, as people feel out which model is going to prevail over time. We're not picking winners and losers. We're providing the tools for the marketplace to make the right decisions.
No, if anything, I feel like you guys are picked to be a winner in this overall marketplace, Alan. That's what I think. I mean, so kudos to you guys in general at tZERO, and having gone through the onboarding process and reviewed the disclosures and such. I mean, as you mentioned, you guys are very transparent in how you approach the market, and that's it's very important. Again, you've got 5 more minutes here. I'd love to take advantage of this time, maybe with a little bit of a lightning round and things on a fun and energetic high note, if you don't mind.
I'd love that, please.
Yeah, let's do that. How about a one word or a short answer response to these questions? This might be edgy. So if you don't want to answer, it's okay. But if you had to choose between one or the other, what would it be? Bitcoin or XRP?
Boy, I'm going to get a lot of hate mail on this, but look, I get this question answered all the time. With some versions of it, Bitcoin versus Ethereum or Bitcoin.
Yeah.
I have a long-term bias for native tokens that support infrastructure needs, right? That can be used as oil, as ingredients to build tool sets on it. Bitcoin historically has not shown itself to be that. And so by definition, whether it's XRP or Ether or, it supports the Ethereum blockchain or others, I have a bias towards that because those are ingredients on which market structure can be built. I know it's a long answer, so I'll stop.
No. I mean, and we really didn't even tap dance on the network, which I believe the Link network, which you guys are building or building upon. It's a consortium of other chains as well. So, I mean, you guys are so intertwined in this space and building so much at the same time. Again, I wish we had more time, Alan, because I feel like I'm doing disservice either to you or in the community on how much you've accomplished or how much information that we could share to these guys in this short amount of time. But anyways, follow-up question: public markets or private markets?
You know what? Both. I think public markets it's great that we're focusing on tokenization of public equities and public cash products, because that drives the marketplace to develop the kind of structure that you need. But then that structure is going to loop back to private assets and loop back to them in a way that actually is going to create real liquidity, real price transparency, and real community around it, including on the demand side.
Thank you. AI or blockchain?
Complementary, not exclusive. I think AI, particularly the needs of machine to economy, is going to be a force function and a driver for tokenization of all sorts of records, including financial assets.
Yep. Yeah. Especially with the X402 a protocol allowing that value transfer amongst the AI agents that's like you mentioned, is complementary. Most underrated asset class to tokenize?
Interesting. I would say it's real estate. People have talked about tokenization of real estate. It hasn't really gotten the kind of scale that it should, in part because from a regulatory perspective, if you tokenize, if you take a single asset piece of real estate in the US, you never really have to go through kind of all the hoops of creating a security and kind of everything that comes with it. I feel like the reason why people think it should be easier has a lot to do with, and we've spoken to the SEC about this, make the process of fractionalizing and tokenizing and yes, securitizing single asset real estate easier than what it is now. I think that's really going to create the kind of user experience that people want.
Yeah, I'm sure. I mean, you mentioned with the sandboxes being one of two to receive the SPB BD license, you've probably had to work with the SEC and various regulatory regimes closely for some time, and so kudos to you. Again, that's pretty fascinating. One regulation you'd change tomorrow?
Interesting. I would move further down the path, and it's sort of built into the Clarity Act, of breaking down silos among regulated entities. There's no reason why a regulated broker dealer, for example, shouldn't be allowed to do more with crypto.
Mm.
Now, we were one of the two, as you said, special purpose broker dealers who got the license a couple of years ago, almost.
Yeah.
At the point. And although the rules have changed, I mean, the broker dealers are not that special anymore. We have a significant head start in the industry on being able to do that, and we can custody and accept crypto, including stable coins, in the security settlement process. But why shouldn't we be able to offer it as a product to the investors? What's right with appropriate guardrails? I think there's still too many silos, too many middlemen silos in the financial services industry, and that's getting in the way of some of the experiences that people want and that DeFi could deliver. So.
Yeah. Okay. Well, I know that you've got to run here, Alan, but for those in the audience, if you've got 2 minutes to spare before I let you go, and for those that might be joining in late, I think one final exercise which would be very impactful for you or for those listening is, let's just imagine you were doing a raise for tZERO. You're in a room. You're in the middle of an IPO roadshow. What's your go-to pitch for tZERO amongst institutional investors or the sophisticated crowd? Would you be willing to go through that exercise?
Yeah, absolutely. And look, I think if you can boil it down to a couple of sentences, you should try harder. tZERO is a leading integrated regulated infrastructure stack for tokenized assets in the US. We do one thing and we do it well, and that is to provide a bridge for a range of market participants from the traditional economy to the tokenized economy in a way that allows them to overcome regulatory, operational, and technological barriers quickly and to access a growing ecosystem of tokenized financial products in real time.
Yeah, well said. Again, one who's just very decorated, a fabulous pedigree. Good for you, sir. Love to have you back on the channel soon. Hopefully sooner rather than later, especially as this market matures. And I'm sure you're going to be revealing something new within your firm or related to the industry very soon here. Do you think the Clarity Act is going to pass?
Yeah, funny. That's a great question. And we were in Washington in June meeting with staffers on the Senate side this time. We go there pretty regularly. If you look at where we are, and now this is almost a month later, if you look at kind of where we're on the calendar, and yeah, it's an important piece of legislation. The White House is very focused on it. I think the president, the Meta had phone calls with key senators today. You just look at the calendar where we are. It's an election year. I think the odds at this point are less than 50-50. Now, my business does not depend on Clarity Act, right? Everything that we have is built and kind of exists apart from that. Some things might become easier. And it's obviously a good thing for the industry because remember, nothing lasts forever, right? The only way to future-proof this industry is to codify these rules into law, because even SEC leadership changes, as we know. And so it's an important piece of legislation. I hope it passes. Given where we are with the calendar in an election year and what happens during the lame duck session, after the election, it's I think kind of. For me, recently, the curve went down below 50%. And I think if you look at the kind of the prediction markets sites, they're probably tracking that result as well. So,
yeah.
Hey, you know what? We live in a black swan world, so I wouldn't be surprised if something happens if it's important enough for the stakeholders in Congress and the White House.
Is there anything before I let you go that we haven't discussed that you'd like to share before close out?
Ray, you have been gracious, extraordinarily well informed on this topic. I've enjoyed our conversation. I'd love to chat again. tZERO.com is a great way to follow us. Anyone who's interested with more questions, please reach out. And again, fast-moving, innovative space. This is the right company with the right asset mix at the right time. And we look forward to continuing to execute on what is built and ready and in the market already in our unique infrastructure capability stack.
With the right man at the helm. Thank you very much, Alan. Appreciate you having on the channel. We'll have you back soon. Thank you very much. Appreciate you all for tuning in today.